Alright, welcome back. Nice to see you again. This is the second video, so we're progressing forward. I'm very happy about it. And today we jump on the screen and take our first trade together. I'm going to show you how I analyze stocks and how I do swing trading. This is very important before we execute a trade, because there are some parameters we want to check before. In my perspective, it's very important when you go on the long side that you have very value companies and they are supported by the charts. And if we're looking for shorts, maybe we will do it later in the next weeks, then we're looking for weak chart patterns and weak companies especially. So this is the first trade we do together. So we jump on the screen and I will explain you what we are going to do today and what kind of company or stock we pick together. So let's jump on the screen and take a look. So I'm sharing my screen with you, and this is my first pick we're going to execute today. It's the Deutsche Boerse AG. That's quite funny because it's a German one. My first trade will be the stock exchange in Frankfurt. It's like the NYSE or the Nasdaq in New York. And all the investors and companies will share their stocks here. And so this is the reason why we're going to jump on a trade today here. That's quite interesting. We will check the chart patterns right now, and I'm going to share with you how and why I'm going to do a trade here. Yeah, this is a swing trade. We are now on the daily chart. And if we jump on a weekly chart, we see it's a big uptrend since years, since the financial crisis in 8 and 9. And the last weeks were not that good because we had a downtrend since the tariffs crisis in March, April. And now I'm expecting a good autumn and a good spring, because we had here, if we take a look on the downtrend, a decrease of quite 25%, and this is huge. And we will see in a minute why it's very good for us right now. So let's take a look on my Analyze tool. Here, this tool, sorry about that, it's German. It's called Trader Fox. I'm going to share with you in the description if you like to use it, because we only take a look on the numbers. We don't care about the words. You can just use it no matter where you are. And we see here, we have on this side a quick quality check on every stock and every company we're going to search here. And the ticker is DB1 and it's hosted on Xetra in Germany. And we already saw it in the charts, but here's our confirmation. It's a huge uptrend, and this is what we're going to expect for the future as well, because the quality check says 15 from 15, and this is amazing. For example, if we take Amazon, it has 13, I think, or 12 from 15, and other companies like Microsoft has also 15 from 15, and they're rising and rising and rising. So this is our expectation for the next weeks. And if we scroll down on the website, again, we don't need the words, we just need the symbols and the numbers. We see here the fair value. And the fair value gives us an overview about the best opportunity between price and value of the company. So sometimes we see here the price is very up in red lines. This is plus 40, plus 30%, and this is quite too much because we are out of the range from a good value price opportunity. This is what we want. We want stocks, they have a good value, an inner value, and a fair price. So the green lines, they are like Black Friday. We want to have a good price, a sales price, and this year, this is quite too expensive. So at the moment, we are close to be on the fair value area. They said it's the best price opportunity for us here. So it would be better if we go more downside, but I don't expect it because we have been there quite a couple of years, and we rise up very high and came back to this area. So this is the second confirmation. We have 15 from 15 points. and we are close to the best fair value opportunity. So let's jump back on the chart. So I told you in the beginning, we have a decrease of 25%. That's a lot. That is huge. And we have 15 from 15 points. We have big decrease. So we have a value company, a value stock. And now we're looking how and where we can execute the trade. We are right now in the weekly chart. This is good because so higher we are in the time frames, so more important are resistance zones and supporting zones. And I'm marking here very interesting areas that are very important for my next analysis. So weekly chart. And the first thing I'm going to do is I see here a very, very nice and interesting zone where the market has building a range in the last weeks. So we see here the market has traded buyers and sellers. So they were confirmed with this price area. And from there, the market starts to rise up to around 300 euros, close to 300 euros. And we saw now that the market comes back to this area. That's quite cool because here we have a very, very strong supporting zone. And we saw that this candle from September, end of September, we're trying to trade under this area, but it doesn't work. We have the big absorption, and this is interesting for me because the next weeks the market were over this range, and so this is what I'm looking for. The next area could be this one, but I don't think this will be reachable because we have here 215. I think this is too low. We had a big downtrend the last weeks. That's quite enough. All right, let's jump back to the daily area, the daily time frame, sorry. And what I'm doing next is I'm using the Fibonacci retracement tool. So we see here on this very important low, on the lower low, and bring it up to the highest point of the range. And we see here now we are under the 0.04. We are now under the 0.5 area zone. That's cool because everything above this line is a premium area, and everything below this area is discount area. What I'm going to expect and what I'm looking for is that for long trades, we come down the 0.5 line compared to the range we had before. So here we see we are on the turquoise line right now, and we are in the area we marked before. This is the range where the supporting line is placed. So that's quite cool. And for me, it's a very, very good setup. So remember, we have 15 from 15 points. We have a good price value opportunity, and we are on a very interesting zone. For my expectations, we will up from here to the next weeks. And by the way, this is from my perspective and from my side, it's only a So from my perspective, I'm only sharing with you my trading idea. So this is not a recommendation, it's just sharing the idea. So the only other tool I'm going to use right now is the tool to execute and plan my trade. I'd use here the long position tool from TradingView, and you see that's around $224 or euros for this example. And my take profit is around 273. And you see, I'm using the Fibonacci retracement tool as well for planning my take profits and stop losses. For here, I'm using the red line because it's for me when the trend goes up again. I think it's very possible that we go to this place. And you see here in the past, the market always reacts on these lines. We see the green line close to the yellow line here, this low. We see here green and yellow line. So the market very, very often comes back and goes forward to these lines. And so I'm using them very often to plan my trade. And now the most important thing is, I'm deleting here this area, is to place my stop loss. So the most important thing in trading is to always use a stop loss. Your task as a trader is to always stay in the game. And if we lose 50% of our portfolio, we have to do 100% of performance to go back to this break-even point, and this never, in any case, this should never happen. So always risk just 1% of your portfolio. So where do I put my stop loss? The easiest thing is I put it here under the red line. It's under the low, and yeah, that's quite good. But we only have here a chance risk ratio of 2.55, and I always looking for 3 to 4 points. So out of 4 trades, you can lose 3 trades, win 1 trade, and you break even. So now the question with the stop loss, because it's important, it will be very effective of the ratio here. Let's jump back on the weekly chart. There's another thing I want to show you. We have here, yeah, in November 24, we have a big fair value gap. That means we have a gap from 3 candles. We have a gap on the second, from the closing point to the opening point. Yeah, here's the opening point of this candle, or the lowest point of this candle. We have here a big fair value gap. So let's take out this area because it's quite confusing. And we see here another very interesting thing. This is also, you see here, this is a volume imbalance here because the bodies of the candles do not match here. And what the market often do is, because the task of the market is to close liquidity. So we have inner and outer liquidity. We come to it later. But we see here, that's very interesting. If the market comes down, I am expecting it maybe to 50% of this range. And we will put our stop loss here under this area. Okay, we go now, you see here, to up to 5. Okay, that's great. So our stop loss will be at 214 euros. It's 10 euros below the actual price right now. So we going, oh, now we are 223.7. I think what we can do is we can put a limit order later on. Let's say on 223. Okay, so I think this will be my executing point. We are going to save it. All right, so that's everything. I think that's quite enough for today. I will jump on the trade in a few minutes and share with you the results in a few weeks.